Good morning, traders. Richard here, and a quick Ichimoku Cloud Chart market review of CrowdStrike, one of my favorite cybersecurity stocks. We have had a really strong rally, up about 60% into this climatic run-up here, after the volatility breakout buy signals here generated by artificial intelligence. We then had a nice cloud cross buy signal here as well in around these levels here, cloud rebound signal there, and then plenty of the turning line breakout buy signals there. But more importantly, CrowdStrike had a nice double bottom base breakout here, and it also recently broke out of this entire base. You can also draw a nice cup and handle here. That was kind of the handle area there. So we had some beautiful chart patterns coming out of this. We've also got some nice base breakouts here. So it broke out of this very large consolidation base. The earnings came through, a little bit of a mixed bag for investors there. Snap gap down and now fighting for support here at the standard line and the turning line of the Ichimoku Cloud. Now the AI volatility breakout signal is still in a trade. The trailing stop loss here is down here at 409. But I would move it right up to a little bit below the turning line of the Ichimoku Cloud. So if CrowdStrike dips below, starts trading below this standard line of the Ichimoku Cloud, then it's time to take some profits off the table. Other cloud chart trades were taken off the table when we got to this climatic run here, because by that time we could see that the price action was very extended from the top end of the cloud. So there was a risk that it could come back and consolidate. But so far so good. A nice base breakout here. Will be interesting to see if we can get a continuation of the rally, if it successfully tests the support at the standard line. So keep a very close eye on the price interaction this week of the standard line of the Ichimoku Cloud, as well as the top end of the front end of the cloud. This 455, which is this high there, is also a critical front end cloud chart support zone. So keep an eye on that. Looking at the weekly Ichimoku Cloud, you can see the AI buy signals over the last couple of years, some really strong, caught some really good moves. Yeah, another beautiful one here at the cloud chart rebound there, another rebound there at that major support zone. So fantastic rebound rally on the clouds, on the weekly Ichimoku Cloud. You can see a little bit extended on the weekly one, so there is some downside risk in this, that CrowdStrike can dip back into this zone and look for support at these critical moving averages. So look out for that. There's a bit of risk here that this breakout stalls here, and then we can see a new consolidation form in and around this 460 zone. Let's go and take a look at the 4-hour. Over the last couple of months, the 4-hour in combination with the Ichimoku Cloud gave us some really strong signals here. You can see March, a nice little rally there, and then again in April. And now volatility breakout there, beautiful trade there, bouncing off the top end of the cloud. Another one bouncing off the standard line of the Ichimoku Cloud. There we go. And now steady strong trend to the upside. Price action above the cloud is bullish, and we've just got a volatility breakout signal on the 4-hour one. Will be interesting to see if that one pans out. So the upside target would be the old high there, and you can also see that volatility breakout signal is very close to this cloud chart support zone, this 446 zone. So we've got a vol breakout signal on the 4-hour Ichimoku Cloud. Will be interesting to see if we get a continuation of that move. Could still see it to come back and test this moving average here, the 55-day Fibonacci one, as well as the top end of the cloud. So if there's any weakness to these levels here, that will be another entry point, as just a successful rebound from this top end cloud chart support level there. So far so good. Nice buy signals and swing trade signals on the 4-hour daily and weekly using AI and Ichimoku Clouds. Let's just stand back a little bit and delve a little bit deeper into the valuation and the numbers on CrowdStrike to have a bit of a perspective there. If we look at the Starmine models, the price momentum model is in the top 10% of the market, so we should expect some more relative price performance on a price momentum basis. So our trade is very much momentum based one. The earnings quality rank, there we go deep into the balance sheet and income statement line by line, and we've identified more than 8 different different factors that drive earnings growth and the quality of earnings, and that ranks in the top 20% of the market. So that's good. Well, the higher that ranking is, the better, but so far so good. We take comfortable in the sustainability of CrowdStrike's earnings with that earnings quality rank. Credit risk, and that's a high ranking there, so there's not much credit risk on this one. And the credit risk in terms of smart ratios, or the smart holdings one, is a little bit better one to look at. There we look at the funds that are buying CrowdStrike and historically where they used to buy the stock, and we kind of reversed engineered their trading strategy in terms of the funds. We then go and rank this. So at the moment, the CrowdStrike does not have the same institutional support in terms of when the funds normally buy it, and I think it's because of the relative valuation and intrinsic valuation ranking, which is very low. It's in the bottom 10% of the market. So on a relative valuation basis, you can see the price earnings ratio, very, very high price earnings ratio for the next 12 months going out. And you can see the industry median there. EV to EBITDA, bottom 10% of the market ranking there. 80 times ranking, 80 times EV to EBITDA ratio, EV to sales, price to cash flow, which is very important to watch, how the cash flow of the business is doing. There you can see also still a very, very high ranking. So CrowdStrike's got quite a lot to do, and that's why the institutions aren't really buying it, the top funds aren't really buying it yet based on their methodology, because their smart holdings give us an idea. We reverse engineer when the best performing funds are buying it, and then work our way back from that. Right, now the other thing to remember is, what's interesting is that if you reverse engineer the current stock price, you use a DCF forecasting method, and you use the stock price as the input, you can see what is the market implied growth rate for CrowdStrike over the next couple of years, 5 to 10 years, and that's just under 30%. So you can see there's quite lofty valuation in it and great expectations in the stock to keep going at 30% per annum in terms of growth. So that's what the current stock price is implying, and that's also kind of what investors are expecting to justify the current valuation. So the risk here is that the earnings quality is good, but the relative valuation, if we look at the other models here, the relative valuation is the valuation momentum score, combined alpha model. These rankings are quite low, as well as intrinsic valuation and relative valuation. So there's room for improvement on that basis. The analyst revision score is 62. You'd ideally want to see that above 80. So the analysts aren't not yet aggressively revising their numbers to the upside. And with the ARM score, we do track the most accurate analyst estimates as well. So we're more interested in the best most accurate analyst forecast on a particular stock. So price momentum, nice, okay. We are trading this on a price momentum basis. Earnings quality is good. Credit risk is okay. Smart ratio is okay. Structural credit risk, there's a little bit of a risk factor there in terms of the Starmine models. But so far so good. CrowdStrike pumping ahead. Now, the thing to watch out for, as we said before, watch out for the trailing stop loss and the price interaction with the standalone of Ichimoku Cloud. And it will be quite okay for CrowdStrike to form a new base on top of this base, and that would be a base on top of a base. But so far, nice rally in CrowdStrike. Volatility breakout is still there. 4-hour volatility breakout signal on CrowdStrike, but just watch out when we start to underperform. Yeah, if it starts to relatively underperform the S&P 500, then we'd like to switch out of the stock for now. But so far so good on CrowdStrike. Thanks for watching. Until next time, happy cloud chart and AI trading. Bye for now.